So before we get to that pre-open time, let's bring you the latest from the banking universe. Axis Bank's Deputy MD Rajiv Anand says a growth slowdown was quite palpable following the second quarter earnings. Speaking to CNBC TV 18's Ritu Singh, he says credit demand from corporate India is not much. On the upcoming RBI policy, he adds that while a repo rate cut is unlikely, a CRR cut would be a welcome move.
The 5.4 obviously was a bit of a shocker, but I think if you looked at the numbers in Q2 across the entire spectrum of corporate India, I think the growth slowdown was quite palpable. The question really is this cyclical, and how much of this we will be able to make up in the second half of the year? I think from a bank perspective, corporate India is deleveraged. Their own cash flows are continue to be quite strong, and so therefore to that extent we don't see that much of demand from corporate India at this point in time. Our SME and mid corporate book continues to grow quite strongly. Our mortgage book continues to grow reasonably strongly, but I think the fact that we've seen some delinquencies on the unsecured side has been well articulated, and so therefore all banks, including us, we pulled back on growth on the unsecured side.
So if you talk about credit growth, where is it coming from? What are your focus areas? Any larger figures, since now we're closer to the end of the financial year, what kind of range could Axis Bank get to?
What we have been guiding the market is that we will grow 200 to 300 basis points higher than the market, through the cycle.
Speaking of liquidity, there's been some expectations from some parts of the market that perhaps in this upcoming monetary policy we may see a CRR cut. What's your own expectation? And if there is a cut, what would that mean for the bank? How much excess capital could be released for lending?
I think the fact that we've seen this print on GDP growth has certainly surprised everyone, and I'm sure RBI is redoing their numbers as well. I think your channel has already articulated the fact that with 6.2% on inflation, it's unlikely that we will get a repo rate cut anytime soon. I think it's a very close call on whether a CRR cut is something that we will get on Friday. On the one side, yes, I'd be delighted if the CRR cut comes through, because one of the things that I've been mentioning on your channel as well is the fact that despite the fact that the repo rate is at 6.5%, banks on the margin are raising money at anything between 7.5% to 8% for 1 year deposits, and I think that gap needs to come down, and I think a CRR cut will certainly help bringing that down. But I think, to my mind, I think it's a close call.
Well, so you're not expecting any repo rate cut, and that, I suppose, is good news as far as the short-term outlook for your margins is concerned?
I think, given the fact that much of the book is EBLR linked, a repo rate cut will have a short-term impact as far as margins are concerned. Remember that banks are a marginal cost business. If the repo rate comes down, it is inevitable that deposit rates will come down as well, perhaps with a lag. And I think as we think of NIMs through the cycle, you'll find that in India, NIMs have been in a fairly tight range. While we do spend a lot of time and energy trying to manage and have conversations around this, NIMs will continue to stay in a fairly tight range for banks.
All right, well, that's an interesting conversation with the top management at Axis Bank. But